Okay, so the Federal Reserve just increased the benchmark rate by 0.75%. And I want to talk in this video how is this going to impact the market. And I mean the market, I mean most of all the families, how is it going to impact the people, but how is it going to impact your investments, the stock market, the crypto, and even the property markets. So for the last 2 years, because of the COVID, the Federal Reserve, all central banks, probably like most of the governments around the world have been lowering interest rates. And by lowering the benchmark interest rates, they lower the price of the money, the price of the money that banks use to borrow money to each other, right? And if the price of the money is cheap, then people in companies can get cheap loans. So the rates before was like zero. Most of the countries around the world was close to zero. Meaning that it's very cheap to get a loan. Get a loan to buy a house, to get a personal loan, or if you are a company, to fund your activity, your businesses. Now, the 0.75 hike is supposedly to tame inflation, because now we have tremendously high inflation because everyone was drunk on cheap money and buying stuff. And also you have, the logistics problems, the lockdowns in China and so on that are also making the inflation going higher, the war in Ukraine and so on. But the most important thing that provoked this inflation and that politicians have been saying that will not impact is actually the cheap money, the artificially low interest rates. So now the Fed increased by 0.75%. And how is this going to impact? Well, imagine this. You can do a very quick, simple calculation. If the interest that you pay for your loan increases by 0.75%, how much do you pay more? Imagine you have a $1 million loan and you pay every month. It basically means that 1 year you will pay 0.75 more in interest rate. 0.75 over $1 million is $7,500. Now divide $7,500 by 12 months and you'll see that you pay like 600 something US dollars more per month to repay the loan. That's a lot of money, right? If it is like $500,000, then you'll pay like 300 something more per month on average. That very rough calculation, but you get an idea. And this money that people pay additionally they will pay because of the interest rate hike is money that is not going to be invested, is money that is not going to be used for consumption of goods. People will not buy products, people will not buy stocks, people will not buy crypto, because now they have a little bit less money because they need to pay more interest rate for their loans. And also on the other hand, companies and people and businesses will get less loans because now the money price is also higher. So this is how the Fed wants to tame inflation, and they will probably do it, but at an expense of having a recession. So the growth, the GDP growth will be negative for a period of time. This will probably cause some unemployment, and it may not be very good. Now, how should you cope with this? Well, the best action that you can do now is probably not financial advice, by the way. I think I'm supposed to say that this is not financial advice, this is only my opinions. But I think the best way to approach this market at the moment is, most of the time we used to say cash is trash. At this moment with the recession and the interest rate hikes, cash is king. So if you have money on the side, hopefully you have, or at least try to save as much as possible and try to invest it, not going all in, but starting dollar cost averaging. Dollar cost averaging is now the most important thing because the prices of stocks, crypto are quite low. We don't know how low it can go. Bitcoin is like $21,000. Can it go lower? Yes, it can, but the fact is that it's like already down like to 2/3 of what used to be like from all-time high. So it's a good opportunity to buy now. But I would say if I have $1,000 to buy crypto or to buy stocks or whatever, I'll put like $100 per week. I will not, or per month, and I will not go all in with my $1,000 because Bitcoin is now $20,000. It can go to 15, it can go to 10. So you can't really be sure, but you can be sure that if you dollar cost average and timing the market beats timing the market, if you stay invested and if you dollar cost average, you will reduce a lot the risks and you will be tremendously increasing the probability of having successful investment. So dollar cost average, if you have $1,000, invest a little bit every month or every week or every day, whatever. Don't go all in, budget well your investments, and make sure that you are averaging down the price of your investments just in case it drops. The prices are amazing at the moment. It's a great opportunity, but again, we don't know how deep it can go because now we are entering in the recession. Some people will get unemployed, companies will invest less. Probably have seen that even crypto companies in the crypto space are laying off people. Coinbase is laying off 18% of their staff. So yeah, be careful, invest slowly and steady, and I'm pretty sure everything is going to work out well.